The sanctions that have been imposed by Western governments are dramatic and were escalated quickly over the last weekend. And so we've seen Russia's access to a good chunk of its foreign exchange reserves, its dollars, its euro accounts abroad, frozen, so they cannot access them. So because of that and the impact on the ruble, as you said, they have raised interest rates. They've also imposed exchange controls limiting how Russians can send money outside the country to pay for some of their foreign obligations. They've also imposed an export surrender requirement saying that 80% of all export receipts have to be converted to rubles within Russia so they can have an increase in the foreign exchange reserves. And so it has had a pretty, dramatic impact in terms of limiting Russia's ability to easily access its usable currencies in the rest of the world. With that said, it hasn't completely frozen them out of global financial markets. They have foreign exchange that is denominated in Chinese renminbi that can pay for trade with China. They have gold reserves, and the gold is physically in Russia. They made sure to move it all out of any foreign gold depositories around the world. So it's all back in Russia. Of course, selling gold is not something easily done. And if they sell gold, whoever's buying it is going to want to have it in their own depository, in their own country. So that is not an easily usable immediate reserve. But basically, our sanctions exclude payments for oil and gas. And so that should allow Russia to continue getting the most of its foreign exchange receipts. And the reality is that the sanctions have had sort of a secondary impact of refineries being worried about buying Russian oil or gas and falling afoul of US sanctions and other sanctions. So it's already having a chilling effect on the market, even if supposedly some of those transactions are not sanctioned. We've seen impacts already on global pricing. Russia's also a big exporter of wheat, as is Ukraine, other grains, and some basic rare earths that are important in the production of semiconductors and catalytic converters. So we are going to see impacts from that on the real economy. But for right now, Russia pretty much is frozen out of the Western financial system. That doesn't mean they can't engage in trade at some levels and can't access some payments, but it'll be much more difficult, much more expensive. As far as internally in Russia, they have protected their domestic system. They have a domestic payment system. Their domestic debt is not that high. They've paid a lot of it down. They've converted foreign exchange debt to domestic debt. And they have plenty of cash on hand. The central bank built up its physical cash of euros and dollars, knowing that Russians, anytime they're nervous, they convert their deposits to cash, which we've seen, the lines at the ATM machines. So the central bank was well prepared for that. So the impact of the sanctions will be severe. I think that'll build over time. But the reality is that hasn't turned Putin around.